Hello boys and girls. So today I just want to go through a trade review with you guys using the 60-minute model on the Nasdaq futures this Friday. Starting off here on the 1 hour chart, I did not have a bias. I could just pin reference points on each side of the marketplace. So what do I mean by that? When we're trading up here, we've got this gap, this inversion fair value gap. Down here in a deeper discount, we've got all this whole green box right here is the new week opening gap. We've got all the quadrant levels, converging PD arrays here in a discount as we are in a premium and have swept this high. But then we've also got the fact of a continuation with this SIPI being laid over this old BISI here, creating a balanced price range that we could come up and fill. Also piercing this buy side liquidity here. And as we can see at 9 o'clock candle open, we opened, dropped lower into this small BISI here, filling this inefficiency. So it's really as simple as what I've written at the bottom here. I just waited for a reference point to be reached at a specific time and looked to confirm a lower time frame reversal pattern and entry mechanism. And that moves us on to the lower time frame charts. But first of all, I just wanted to start off by what I do at 9:30, which is open the regular trading hour charts, and I have a look at all the reference points. So first of all, starting off with this opening range gap from yesterday's settlement price to today's 9:30 opening price, and this is the discount gap that was offered to us. And now we can see we have all this liquidity above here on the regular trading hour chart, resting above these equal highs. And if we can see, the previous day's settlement price actually closed after sweeping out this sell side liquidity. When we opened up with a discount gap, it is reasonable to expect this to be the objective, as the objective was already done and made jagged on the sell side in the previous day prior to settlement. So then moving on to the 1 minute chart, back on electronic trading hours. And this is that run up into that 1 hour BPR and SIBI, which is this right here and this right here, which I didn't highlight on the 1 hour chart, but as you can see here in the 1 minute, this is also the previous day's first presented fair value gap that resides inside these levels, which adds further probability to the draw due to nesting. Now here's the execution that I took for this run to the buy side using this 60-minute model, okay? So as we remember, we have the potential of, on the 1 hour time frame, reaching up into this objective, and as you can see, we opened at 9:30 and we dropped below into this 1 hour BISI, which is this that I highlighted from the first slide here, and then also the upper quadrant level of the regular trading hour gap, which is highlighted with these bold gradient levels, which is this here. As we can see, we opened, traded up a little higher, and then dropped into the upper quadrant of this gap. Now, as we dropped in here and made this low, we also swept this sell side liquidity, which I don't have here, but if you look at the ES and YM charts, they both made higher lows, not taking out this liquidity. So this was a liquidity sweep with an SMT divergence, adding much higher probability to the liquidity sweep. Then as we were inside this regular trading hour gap and also this green shaded NWOG, and we had a first presented fair value gap that was in close proximity but still above us from down here. It was in a premium. All we need to see here is a change in the state of delivery now, and with this candle right here closing above not only these two down closed candles, creating this order block or this whole section of 3 here as we traded above this opening price, but we also traded above this first presented fair value gap, which shouldn't be traded above if we were to continue going lower, especially after sweeping these stops with an SMT and meeting several converging higher time frame discount arrays, being the regular trading hour gap, 1 hour BISI, and new week opening gap. So then on the next candle, as we opened and we traded lower and we ticked the high of the regular trading hour gap in this bold black line here and the high of this first presented fair value gap, that is where I entered. We traded higher, created this BISI here, very small BISI, and as we created a lower high here to this high, and this next candle opened, dropped into this BISI, I entered long again, and then a quick and sudden rally away, all the way to the buy side objectives. I took my first partial here, and then my terminus inside this BPR and at this first presented for value gap from the previous day. Now the thing is, not only does this 60-minute model work on the buy side on this day, but it also works on the sell side, as this was actually the manipulation for the day, but this can still fit into the model because we don't need a bias to trade, we just need a draw and liquidity. But if we were aligning ourselves with the higher time frame bias and looking for a longer run and a higher probability trend direction, then the sell side of the curve was perfect. And look at that, it still fits in our 9:30 to 10:30 60-minute time zone. So if you remember from the last slide, this is the run here that I just traded on, and we made this high at the first presented for value gap. I did delete the other high time frame arrays that were converging with it and just left this just for clarity's sake so the chart isn't too overcrowded. But we made this high here, we came down, made this low inside this BISI, and then traded higher, failing to make a higher high here and stopping in its tracks right at this first presented fair value gap from the previous day. And now we are also inside the macro. Now we drop down lower and we create this market structure shift. We retrace for the low risk sell into this fair value gap, right, into this premium SIBI, and then also into this breaker block. But remember, if we can refine a breaker block, we will look for a fair value gap inside this breaker block and extend that forward, and that is exactly what we have here. So it comes up, hits the CE of that, and then displaces away. And now we have a couple of things here. We have this displacement, we have this retracement up into this order block, and this inversion fair value gap, which was used here. And a bit of advanced theory here, which I'll touch on in the future, but you know, the algorithm likes to strongly re-reference points in a market maker model that have already been used. So this is a high probability inversion fair value gap when traded below, that's causing the market structure shift, because this has been used here on the buy side, so it should not be ran through and used on the sell side if we're going to continue higher. Just some sprinkles of advanced theory in there for you guys. But anyway, so now we have this range here, and we trade up into this fair value gap, and as we can see, I've highlighted the midpoint of the fair value gap here, and the bodies are closing and staying below that fair value gap, but this fair value gap doesn't reside in a premium. The premium is actually this order block here and this inversion fair value gap, so we touch into that and then start trading off lower, trade below this inversion fair value gap here and come back up, touch it here as well as inside this order block, and then we just continue to trade off lower. We engineer sell side liquidity here, and as we are in a deep discount, we've reached this first presented fair value gap, we start retracing, and then we have this retracement in a premium, into a premium, sorry, of this range from this high to this low. This is the equilibrium point of that right there, so we go just above the equilibrium, and what resides in the equilibrium, this old fair value inversion fair value gap here that was used here for the buy side and then used here for sell side and then used again for further sell side. Well, we've come up and we traced right to this because it resides above equilibrium, and if we are to continue lower as we do, this should not be overran because of the advanced theory that I mentioned before. So from here, we're now out of our 10:30 time zone, but we have this continuation run lower. So we trade off lower, and after this stop run, we invert this inversion fair value gap here, which should not be inverted after the stop run if we were to continue going higher. We tap it here, trade off, create this SIBI, retrace into this SIBI, but this SIBI doesn't fall in a premium, it falls in a discount. So this wick right here actually touches, it's the closest PD array above the equilibrium that it touches, and then we trade off lower. And then we trade through, creating this displacement through the first presented fair value gap, confirming that we are on side to continue order flow going lower. And then we sweep this sell side, okay, which was the 930 to 1030 sell side, and we touch up into this SIBI here. We have an institutional order flow entry drill confirming to us that the market is very heavy and in a rush to go lower, and we just start running down lower, okay. We come to the NWOG CE, and through the midpoint of the opening range gap CE, create this SIBI, and then retrace up into these converging levels to this little smaller fair value gap here, trade off lower, use this fair value gap again, and then trade off to the lower portion of the new week opening gap. We see a retracement up into a premium of this range here, and it is just retracing to this fair value gap and the lower quadrant of the opening range gap and back to the new week opening gap CE. From there we see this fair value gap be inverted and used as support, or used as resistance, I guess, to continue to displace lower. Closest fair value gap is used here, and we just run off into the last macro of the AM session, where I ideally usually like to see my runs be completed unless I'm holding them for further objectives because I've got a premise on the higher time frame. So that is really all I have for you guys today. It was just another touch on the 60-minute model, going over a trade execution that I actually took so I can review that for you guys, and also just kind of going through and reading order flow with you guys and just giving you some thoughts into what's in my mind when I look at this price action. Anyways guys, great talking to you again. I look forward to speaking to you in the future, and I hope you guys have a great weekend. Ciao.